What's up, guys, and welcome to another edition of Market Marauders, beating the market one trade at a time. If you're new to Market Marauders, investment channel, helps you to find the best deals in the market. If that's something you're interested in, make sure you smash the subscribe button down below, like, comment, and share. Now, be going over today. We got earnings season as usual. Lots of earnings that came out today. On the community tab, only had about 3 of them for today. So, without further ado, let's dive into those. So, on the 3 that we have for today, we have Cisco, Lyft, and Smile Direct. This is going to be from the perspective of Webull. So if you'd like to sign up and get yourself 2 free shares when you deposit $100 into your account, make sure you check the description down below. Sign up for Webull so you can get those shares. All right, so let's jump into the first one. We got ticker sign CSCO for Cisco. If we look at today, it looks like they were pretty bullish towards the end of the day. Fell off $3.10 at the end of the day to end at $45 even. But if we go and look at the other portion right here, we can see that drop off was not that far. So still a little bit bullish, in my personal opinion. And I note that by the moving average 10 line is above the moving average 50 line and the moving average 100 line. So to me, that denotes a bullish uptrend, and we'll see that the bullish this is continued towards the end of the day, even though it did fall off. Now, Cisco had their earnings today, so let's jump into their earnings and see how they performed. So here we go. Cisco, for their Q4 or Q4 results, they came out today. They're $12.2 billion, a decrease of 9% year over year. Earnings per share, GAAP of 0.62, non-GAAP of 0.80. GAAP EPS increased 22% year over year. Non-GAAP EPS decreased 4% year over year. So not too bad of metrics, especially considering all the things that happened with the pandemic going on. For FY 2020 results, we have $49.3 billion, decrease of 5% year over year, and then 51% of the revenue from software and services. So as you know, software and services is probably a big deal. A lot of people switching over, a lot of companies switching to remote work, and that stuff takes time. Large efforts from IT departments everywhere to implement those changes to their workforce, where they were able to be made, and this is the company who was basically able to back them up in some of those related topics. So going to earnings per share on here, we have GAAP of 2.64, non-GAAP of 3.21. Non-GAAP EPS increased 4% year over year. Q1 guidance, revenue 9% to 11% decline year over year, and earnings per share GAAP of 0.41 to 0.47, non-GAAP of 0.69 to 0.71. So not too bad of earnings. They definitely were not unscathed by the whole pandemic situation, which most companies were. I think they were able to take a benefit of some things more than other companies were, considering what type of field that they're in. So going to the next one that we have on here, we have ticker sign LYFT for Lyft, and for Cisco on the community tab. If you check that out, I had it as a call, which to me seemed to be the best option. And then I had for Lyft a put. So if we see on here, they fell off quite a bit after their earnings. Going in here, we can see their moving average 10 is $30.70. Moving average 50 is $30.63. And the moving average 100 is $30.62. They ended the day at $30.52, and it seems like after hours they went down 23 more cents to end at $30.29. So, okay, metrics. Still bearish, I would say, or beginning a bearish trend. If we see that they start to go down, the moving average 10 line has not crossed the moving average 50 and the moving average 100 yet, but is very close to doing so, and that to me denotes a very bearish pattern has begun. Now, if you're new to stocks, bearish just means that the stock is going down, and bullish means that the stock is going up. So if you're not familiar with those terms, that is what I'm referring to when I say a stock is bullish or a stock is bearish. So bearish meaning going down, bullish meaning going up. So jumping into some background information on them, their press release from their earnings, they had this PowerPoint explaining some of the stuff that they had. So key financial metrics, revenue decreased to $339 million. Adjusted EBITDA went to $280 million in the negative. And then revenue per active rider was a 2% year-over-year decline compared to where it was. So it went from 39.77 to 39.06. Active riders went down 60%. So a very large decline of riders. They were definitely hit pretty hard from the whole pandemic situation. Them as well as Uber. And there was news today that Uber may be closing down some of their locations, but the whole rideshare industry was hit very hard. If we look at companies like Hertz was hit pretty hard as well by filing for bankruptcy. So a lot of uncertainty as far as that's concerned. And I think one industry that was overlooked as far as how the pandemic affected them compared to other stocks like cruise lines and hotels. So stocks like Uber, Lyft, and Hertz are all in the rideshare sort of niche. So you have to also consider that they were affected as well. So going into active riders, decreased from 21.8 to 8.7. 60% year over year decline. Rideshare recovery. If we see on here for Q2 2020, 75% to 70% to 61% to 54%. So 95% in rideshare rides during week ended 26 versus week end in April 12th. So they were hit pretty hard as far as financials were concerned. So gonna take a while for them to recover, in my personal opinion, until a solution is made or a vaccine, comes out for the whole pandemic situation. So jumping into the next one that we have for earnings, we got ticker sign SDC for Small Direct Club, headquarters in my hometown, Nashville, Tennessee. So definitely had to add them to the list. If we go on here, we can see their moving average 10 is $9.32. Moving average 50 is $9.07, and the moving average 100 is $8.99. They ended the day at $9.32. I had them as a put on the community tab. They went up today and ended at $9.32, but fell off 47 cents to $8.85 towards the end of the day. So they fell off after hours, but if we see by the left-hand side, by the green, they may possibly rally up towards the beginning of market opening tomorrow. Going into their earnings, on here we can see quarter 2 2020 results. This is an entire PowerPoint. If you all want to go read the PowerPoint, I'll have it, or you can Google the Small Direct, and it's all public information. So you can go read it and dive deep into it. So I'm just going to go over a part of this, which is the financials. So net revenue is 107.1, negative 45%. Gross profit went down 64% year over year, 58.3. Gross margin 54%. Adjusted EBITDA 20.3. And EPS diluted is 0.25. The decrease was driven primarily by a 53% year-over-year decrease in aligner shipments, which came in at 57,136. In quarter two, we saw our cancellations increase from 5.3% to 6.5% of gross aligner revenue. We do not believe this increase will be permanent. However, we do want to be conservative given the uncertainty of the pandemic. So gross margin for the quarter was 54%. Decline is described in more detail on the following page. Quarter two adjusted EBITDA was negative 20 for this quarter, the sequential improvement of 70%. So they got hit pretty hard from this pandemic. Their aligners, it seemed like one of their best sellers got hit pretty hard from this. So, probably going to see this decline, in my opinion, in the future until they can figure out a way to fix that supply chain to get those back out to consumers to increase their profits. So, moving on from earnings, taking a look at Tesla. Tesla, as you know, or if you don't know, you missed the live stream yesterday. Yesterday, Tesla announced they had a 5-to-1 split. So basically, they are following suit from Apple. Apple had its 4-to-1 stock split announced probably a couple weeks ago. I don't remember the exact date, but both of the confirmations on those are on August 31st. So on August 31st, Tesla and Apple will both have their shares drastically decreased. So basically with the split, you don't lose money on a split. The split just changes the increments in how much you have. So one example I have is if you have $1 and you have a 4-to-1 split, then that means each one of your shares, or your one share becomes 4 shares, and now you have 4 quarters. So that's an easy way to explain it. It doesn't devalue what it is. It just changes the rate at which it is. It is also a good thing, in my opinion, because it helps other retail investors get into the stock. So, everyone's not able to afford a stock that's, $1,564, which is what it ended today. Some people can't afford to buy one whole share, even though partial shares are available for a lot of platforms. People still aren't able to buy a whole share. So having the split will help a lot more investors be able to invest into the stock with the capital that they currently have. So I think it was a pretty smart move from them. In my personal opinion, the capital that is raised from this, I think, will also help the company to build a lot more of their factories because it's not going down in price. So people are basically buying more shares. More retail investors are buying shares once the split happens. And then you're going to see, the company be flooded with money, and then they can, use that money to produce, their Cybertruck, their Roadster, their factory in Texas that they're building, and also the other advancements that they have. So there's still a couple of things that we're looking for actual Tesla, and the things that me and I know a lot of the other investors that are looking at Tesla are going to be the S&P 500 inclusion. No one really knows when that date is. I suspect that it may be around the first week of September. I only say that because the second week of September is Battery Day, and also with this with this 5-to-1 split that this Tesla has, it has made the stock more attractive. And the 5-to-1 split is the 31st, so it just makes sense to me to have the S&P 500 inclusion be the week before Battery Day, and then Battery Day the following week, and then the stock rally to crazy numbers after that. So the slightest movement or the slightest news, moves this company quite a bit. Very volatile stock, is one of the most shorted stocks out there. But you can make a lot of money on it. But understanding how the stock splits work, you can use those to your advantage. Definitely increase the amount of money that's in your account using those stock splits. Now going to some data on them, their moving average 10 is $1,532.84. Moving average 50 is $1,446.26. And the moving average 100 is $1,466.34. So they ended the day at $1,554.76. And if you watched the channel before, I would say that this is very bullish. Denoted by the fact that the moving average 10 line has crossed the moving average 50 and the moving average 100 line, and it has began a bullish breakout. Now, to me, what I use for breakouts is when the moving average 10 line crosses this, the moving average 50 line, I would say that begins a bullish pattern. Now, I wouldn't say that it is bullish. I would say it's beginning bullish because it has to pass this second resistance line right here, which is the moving average 100 line, and it doesn't always pass this line. So if it hit this line and then it starts to go back down, I would say it's still on a bearish trend. And that's why I use the moving average 50 and the moving average 100 basically as my first and second confirmation lines when talking about a bullish or a bearish stock. Now, some people trade those a little different. Some people may use the candle pattern, would be like, looking at the different candles and how they behave. You could use the 3-bar method where you have a green candle go up really high, and then you have another candle, and then another candle go up really high. That's called the 3-bar trading pattern. I personally don't use those. I just use the moving average 50 and moving average 10 and moving average 100 because it's a lot easier for me. Or you can use whatever metric you like to use. Just another way to show how to analyze a stock. There's a lot of good information online on different patterns to read charts. But as you know, the one thing that moves stocks the most is information regarding the company. So you can't always rely on reading charts, in my personal opinion, to know how a stock is going to behave. The best metric you can use to your advantage is going to be the information that the company produces. So all the earnings reports, product releases, major news like stock splits, all that information always moves the stock in one way or another. It always goes up or it goes down, and you're able to take advantage of that volatility, whether you're doing options or whether you're just doing growth stocks in general. You can know what your entry and exit is going to be based on the volatility that comes from that news. So going into Apple, seeing how Apple is performing, they're still very bullish, but they have kind of ran sideways. If we look on here, they went up, and the moving average 10 line actually went down below the moving average 50 line. And was about to go down below the moving average 100 line, but it came back up to have that bullish trend. Going into their metrics, their moving average 10 is 451.02. Moving average 50 is $447.62. Moving average 100 is $444.64, and they ended the day at $452.04. Looks like after hours they went up 46 cents. So they ended at $452.50. So not bad of a metric as that's concerned. Still bullish. I would still consider this bullish, even though it went down below the moving average 50 line, and it ended up going back up above the moving average 50 line. So that's the only reason I would say that it is bullish. When it was down here in this area right here, I would say that it had began a bearish trend because we don't know if it's going to go back up above this moving average 50 line. So, my metrics I would say are the still the same, but I would denote that as, it's bullish now. So going through here, I would call this bearish because it got stuck right here, and then bullish because it went up right here. So that's how I read that chart. Definitely looking forward to the split. It says who's ready for that split. I know I am. It's going to be a great time for investors to be able to capitalize on that and actually, get in onto a company that is like one of the top companies in the S&P 500. So, you know, I think that's pretty good. Um, I do not incorporate the T line into my charts. I can look into that, um, and I might in the future, but I haven't so far. So yeah, that's the answer to that. I have just recently incorporated the VWAP 14 line, and that metric has helped me tremendously just because it tracks the amount of volume that the stock has. So using that as a metric, it kind of tracks the moving average 10 line, but it's definitely a good metric to see if a stock's going to go up or if it's going to go down. So going into some of the picks that I'm looking at on my personal watch list, one of them is going to be ticker sign mRNA for Moderna. If you follow any of those pandemic stocks or any of those vaccine stocks, as we'll call them, vaccine stocks, Moderna has just recently been in the news. They have a vaccine candidate on there. I think it was yesterday or a couple days ago, Russia said that they had a vaccine. Don't really know how valid that is, but hey, Moderna is one of those companies that's up there that I'm definitely keeping my eye on because it always seems to pop in the news with their different trials they have going on. So their moving average 10 is $69.73. Moving average 50 is $71.35. And their moving average 100 is $73.50. Says just waiting for a good entry point on Apple. Yeah, I don't know what a good entry point on Apple would be. Anything below what its current price is. So let's go back to that. Anything below what its current price is, I think will be a pretty good entry. You know, a really good entry would have been, back in March when the stock fell. But, you know, I think anything between, let's look at this. Chart's going crazy. I'd say anything between this metric right here, where it's about 256, to about 350, I think will be a good metric. So between 250 to 350, I got my eyes on it, and I think it's a good entry point. So yeah, what is a good entry point that you all are looking at for Apple? Drop it in the comment section. Going back to Moderna, we can see that it is going down, quite a bit, but they just had an announcement the other day. I'm going to read some of it. So it says Moderna announced a supply agreement with the U.S. government for initial 100 million doses of mRNA vaccine against pandemic. So the new U.S. government award of up to 1.525 billion for 100 million doses. Option granted to U.S. government to purchase up an additional 400 million doses. So, quite a bit of money is being flowed into Moderna at the current moment, which is good news for the company. I think it'll yield profitable, and I think, at their current price, which is $69.65, definitely a good buy, in my personal opinion. If we see in the past, the companies that have the most money, in my opinion, as far as this whole pandemic situation is concerned, are basically the companies that have, the better chance of coming up with a cure. Especially when they have, billions of dollars of government funding behind them. Either they know something or we don't know, or, they actually are onto something. I don't think, the government will put that much money behind a company without, knowing that they have something that could, be beneficial to the public. I don't think they would waste that amount of money. Or it may be something deeper that we don't know. I don't know. I do know it got chosen for Operation Warp Speed, which is always good. Those companies that got chose for Operation Warp Speed, um, you know, basically have been like the list of companies and the list of vaccines that the U.S. government is saying they're going to back. So, if you get into a company and it has the Operation Warp Speed inclusion, then I think it's a pretty good pick. So another company that has that, I think is I know INO has that, which I'm about to go over, but Moderna and INO are the two that I know of that have inclusion. Some of the other ones definitely have inclusion, but I can't think of them off the top of my head right now. It says today's award of up to 1.525 billion is for manufacturing and delivery of 100 million doses of mRNA 1273, including incentive payment for timely delivery of the product, with the previous award of up to 955 million from BARDA for the development of mRNA 1273 to license today. Announced it brings the U.S. government commitment for early access to mRNA 1273 up to 2.48 billion. It says under the terms of the agreement, the U.S. government, as part of Operation Warp Speed, which I mentioned before, will also have the option to purchase around 400 million doses of mRNA, 1273 of Moderna. The U.S. government has announced that it's consistent with the commitment to free access of vaccines. Americans will receive mRNA 1273 at no cost for the vaccine itself. As a customary with government purchased vaccine, healthcare professionals could charge for the cost of administering the vaccine. So basically, you'll get charged to get the vaccine, but you won't be charged for the vaccine. So those are two different, fees. So you may go in and, they'll charge you like $25 to administer, a shot. But if you get the shot and you had to pay for the shot, then the price will probably be like, $325 opposed to the $25 that it originally would be just to administer it. So, I think that's fair. And I think that's a price that many Americans can afford. And, with something like this, I think it's not going to be an insurance issue as well. I think it's going to be, they're going to try to get as many vaccines out as possible. So it's not going to be a, hey, you need insurance. I think it's, if you can pay the copay, then we'll give you the shot sort of thing. But yeah, a lot of backing from the U.S. government on this. 1.5 billion for 100 million doses. So just take that number and multiply it times 3, and then you'll get that number. So a lot of money going into that company. Definitely something to look forward to. So going into the other one, we got ticker sign INO for Inovio. Moving average 10 on them is 1340. Moving average 50 is 1677. And moving average 100 is 1869. And they ended the day at $13.75. And they went up 5 cents after hours to $13.80. So, not too bad of a metric as far as that's concerned. They definitely have a lot of government backing behind them. They came up with a way to administer the actual vaccine. They had backing from the United States Department of Defense, from the United States Department of Health. Just a lot of different people are backing this company as well. And definitely want to keep your eyes out on. They just recently had their earnings that I went over in a previous video, so I'm not going to dive too much into it. But, definitely want to keep your eye out on. This is some of the press releases. If we can see just constant, money being poured into them. $71 million contract from US DoD. And this is for their smart device to administer the vaccine. So they have a device just to administer the vaccine. They've also been put on Operation Warp Speed. So just like Moderna, they have funding from that as well and have been chosen to be one of the companies for the vaccine. It looks to be on here. A lot of people are going over Apple. So I'm going to read some of these comments. It says, yeah, Apple may dip, drop between now and August 21st before the split. Don't think that much. I think the trend is up for Apple at least till the end of the split, around 380, 350. Yeah, 380, 350 seems to be an okay price, but I don't know if it'll go. It might go lower than that because you got to think it's a 4-to-1 split. So, it may actually be less than that if it stops its rally. So if it stops rallying up, it may be a little bit cheaper than that. I'm hoping it'll be a little bit cheaper than that. More in the 250 to 350 range. But who knows? We'll see once that comes out. I think there's a lot of potential for it, and I know a lot of people are going to be looking to add that to their portfolio. It's, to me, I look at it as a win-win because if you add it to your portfolio, once it's cheaper, it's going to be before the announcement of the new 5G iPhone, which, if you've seen Apple in the past, the announcement of 5G phones or the announcement of any new iPhone, especially one that's going to be a 5G phone, is going to be, a monumental occasion and going to drive the stock price up even further. So I don't know. I don't think that is priced in at the moment. I don't think people are pricing in the fact that they're going to announce this 5G iPhone. I think what's being priced in now is people want to get the shares before they split, and retail investors, jump in. So, I think a lot of good news is coming out of there. But which one do you all think would be the better buy, though? Do you think Apple would be the better buy, or would Tesla be the better buy after the split? Do you think Apple will go up further than Tesla after the split, or would Tesla go up further than Apple after the split? That's definitely one thing that I'm looking at and considering moving forward, is which one of those is the best buy as far as growth is concerned. One thing also to consider is that Apple currently gives a dividend, so you're going to be getting that dividend for 4 shares opposed to the 1 share. So just bear that in mind. That may be an incentive for someone out there to get Apple over getting Tesla, because Tesla does not currently offer a dividend. So for everyone out there doing long-term dividend investing, I have a small mini course on my channel. It's free. Just go look at it. It'll tell you, how to start a dividend portfolio. I go over my M1 account, so just look forward to that. I see someone said Tesla. Yeah, I think Tesla will probably be shooting up a lot more, after their split than Apple. It may be because of the inclusion, or it may be because of battery day. Those are 2 big factors to consider when doing Tesla, when dealing with Tesla, because Tesla, still has those things to, I guess not overcome, but those things to produce. And they're definitely going to be telling, for how the future of EVs will perform. Like 2 months ago, to me, began this wave of EV cars that kind of popped out, of electric vehicles and electric trucks, and all of them were just mini Teslas to me, like mini Tesla companies. So it was the birth of Nikola Motors, which was already out in the past, but them IPOing and going public. You had Helion talking about their merger. You had what was that other company? There's another company that came out as well, that was talking about making electric vehicles. You got NIO still as well. That's on a lot of people's radar. The Chinese electric car company. So a lot of EV cars have come out in the space, but none of them, in my opinion, have really dug into improvements of the functions of their cars. So, Battery Day is basically explaining how the car works. So, explaining how their battery works, setting a new benchmark standard for the battery. So, you know, I think Americans want more efficient cars. So, having them explain how their battery is going to make them more efficient, I think, is a win-win for them. Uh, yeah, Neo definitely is one to look at long term. Let's pull them up. They just recently had their earnings, and it was a lot better than people expected. Definitely a lot better than I expected. But the company went down after that. So they ended the day at $13.30. Let's look at their moving average 10 is 13.22. Moving average 50 is 13.53. Moving average 100 is 13.58. So let's zoom in. Yeah, they're still bearish after their earnings, but definitely a good long-term one to look at. I know a lot of other countries are more into EV than the U.S. is. The U.S. is still holding strong to their, champions of non-electric vehicles. So, got, the Corvette, not electric. Got all of the Mustang, which they just made an electric car, but they still produce the old Mustangs. You got, SUVs that are still not electric. Like GM, you still got trucks that aren't electric. Um, you know, GMC still making vehicles. So a lot of companies haven't switched over to the electric or EV vehicle space. So it's definitely I think probably more prevalent in China since they have a higher population density areas and probably a more higher demand for electric vehicles and probably a better infrastructure as well for electric vehicles. But definitely interested to see them grow long term and to see their numbers grow. I know I was shocked to see their numbers, especially producing numbers like that with the pandemic. Also considering the fact the pandemic came from there. I thought that the numbers would be a lot worse, but it was good to see them have the numbers they did. Yep, it did run up. Yeah, I didn't expect it to drop as much, but it is what it is. Um, Definitely, if you look at like Robinhood too, a lot of people bought into the stock, so it rallies up quite a bit. Um, Also one thing to consider, which is coming up, is Nikola World, where they're going to be releasing the Badger. So that's one to definitely keep your eyes on for Nikola Motors. They're getting a lot of bad rap. It's kind of mixed feelings in my opinion. There are a lot of bullish people and a lot of bearish people talking about Nikola Motors. Let's pull them up. So yeah, they've been on a little bit of a rally upwards, and that was because they announced their garbage truck. That 2,500, I think it was garbage truck deliveries or orders that came through. Um, so that kind of boosted their price. because their earnings, to me, uh, did not solely do that. So their orders kind of did that to me after the earnings, because after the earnings, to me, they kind of went sideways, or kind of lifeless. But then after that, um, you know, it went up. Um, my thoughts on Nikola is I think that, you know, they're an okay company. Um, Trevor Milton, answers a lot of questions, especially on Twitter. Defending the company. They're just a little bit of things that are kind of fishy to me about the company. Is the fact that he took so much money, in profits when they first started the IPO and bought his house. That to me was kind of, a little bit sketchy, and definitely, not a Elon Musk type of CEO or former CEO, in my opinion. Definitely someone who kind of seeks profits, but not really a go-getter type person like Elon Musk is. And that's just CEO comparison. As a company, fundamentally, I think if they, can expand their different departments, so they kind of have what I would say leisure, government, and commercial vehicles. So um, commercial being like their trucks, and then leisure being their like off-road vehicle, and their um, jet ski, and then their um, government being they have another off-road vehicle that was in their uh, website. No, I do not have any current shares of Nikola. I bought them before they IPO'd when they were, I think it was VTIQ, and they had their merger. The stock went up to 70 something dollars, and I sold all my shares. I had like 20 something shares, and then I haven't been back in since. The stock hasn't fallen to where it was at because I bought in at 20, I think it was like 25, and I sold at 72. But I took my profits on that and I got out. But I'm definitely looking to possibly add some more shares to my portfolio before Nikola World, because in my opinion, even if Nikola World goes bad, where people are like, oh, this isn't a plausible vehicle, it's still going to rally going towards Nikola World. So, you know, regardless of, you know, what people may say, they're still getting orders. The Badger orders, went through the roof. People bought up or reserved a bunch of the Badger orders. Um, and, I think that they have a lot to prove. Trevor Milton has basically, denoted that, they don't mind outsourcing things to different people. So, if they can, outsource all these different things to these different companies, and, get all these different buy-ins and make a product that works, then I think people will be okay with that. You don't have to sole source all of your stuff. You don't have to own everything and manufacture everything. I think people are more concerned with the does it work type thing. And you got to also look at the fact that for electric trucks, how much attention came out with the Cybertruck. And then also look at the fact that the way Elon Musk talks about the Cybertruck is he said they just want to design something that was cool. So he was like, in the last press conference that they had, he was like, yeah, we can make a regular truck if we wanted to. So his goal was not to make trucks. I don't think that's his main function as far as trucks in the sense of like pickup trucks. But if, Nikola's, goal is to make trucks and make good trucks, then I think if they're able to produce that and make a quality product, then I think the stock will definitely rally around that. And it's going to be a first of its kind sort of thing. the Cybertruck was the first of its kind thing, but I think, taking my, engineering mindset out of it, not getting into the specs. Once people see, an electric truck on the road, and being, mass manufactured, if Trevor Milton will ever tell anybody who they're partnering with, and where they're manufacturing it and how many they're manufacturing, then, I think it'll be good for the company long term. But, all of that depending on Nikola World in December. So, waiting for that. But yeah. To make a long story short, yeah, I definitely plan on adding some more shares before all that happens. I think they're, mixed feelings about the company, but I think they have a lot of backing behind it, which may speak more for the company than the CEO does. So I think, they have a good, healthy source of people behind them who are trying to help them accomplish their goal of making these electric vehicles. And I think that may be enough for them to continue their path forward with trying to make these electric trucks and these other electric vehicles. Now, one advantage, which I think a lot of people don't talk about, that I think they have is they're, trying to expand their government side of the company. So if you go on their website, you could see that they have a whole government side of the company. Now, I'm interested to see that expand, just for the fact that, government contracts can yield, quite a bit of money. So, projects along those lines could yield the company to be a lot more profitable, which Tesla really doesn't have. They don't have a government side. So there's Tesla that just does, regular vehicles. And then there's SpaceX, which is more the government side. They're not the same company. So, even though Elon Musk is the CEO of both of those, you can't really say if SpaceX is doing all these things in the space race that will directly help Tesla. That directly helps, SpaceX, or directly helps Elon Musk, acquire more capital to his net worth, but it doesn't directly reflect helping Tesla, the company itself. So I think that's one slight advantage that Nikola has over a company like Tesla, is that they have that, side for possibly doing, government ops or, government vehicles, which, I think would be pretty cool to see. And if they can come up with something, feasible and have, a big backing behind it, I think it'll be interesting to see how that helps them grow profit-wise. Yeah, are there any other stocks that you guys are looking at that you think have potential to run up? SPY today was still bullish, went up on its crazy trend upwards. The VWAP line is tracking the moving average 10 line. So yeah, the economy seems to be back to life, somewhat, in my personal opinion. Definitely considering, all the stuff that's going on with the elections coming up. Biden, just announcing I think her name is Kamala Harris, as the VP candidate. So, it's going to be a pretty interesting race. I think Trump's focus, to me, in my opinion, is on the economy and the well-being of people. I don't think it's really on the race too much. I think it's a difficult time for anybody, to be in, that position, because you have to think about all the stuff going on with the economy, as well as trying to, keep your job, basically, with the debates and stuff. So it's going to be interesting. Debate going on. And I'm interested to see, how the debate, how they bring up issues about the whole pandemic situation. There's not really been a debate where, there's one topic that has affected the whole country. So, definitely interested to see how candidates tackle, the future of that, especially considering the fact that there's no vaccine. So, it's just going to be interesting to see, what policies and stuff that both sides suggest. One positive thing that I've heard coming from the Trump camp is that he said that they're trying to, decrease the capital gains tax. So I kind of lit up when I heard that. If if everybody who's trading is familiar with capital gains taxes, the tax you pay for trading. So if that's lowered, you essentially make, more money sitting at home trading stocks than you do going and clocking into work. So may help a lot of people out there, who are considering, being full-time day traders or full-time traders out there to, switch over to that. But, interesting times ahead with the whole economy. Interested to see, how all those issues are tackled. But I think the economy, has a bright future ahead of it as long as some of these things that are going on actually help. Earnings are going to be good, but there's going to be a point in time where, it's up and down. I can't say at this point in time if it can continue its bullish run because it's still at historical levels. The S&P 500, UUP, which tracks the dollar, seems to be, running sideways, which to me denotes uncertainty in the market and uncertainty in the whole dollar itself. The fact that this is running sideways. But going into gold still had its massive sell-off, and silver had its massive sell-off. I think I just have gold on here, but gold had its massive sell-off. It rallied up, $1.47, but still it fell off. The other day it was at 194.55, 194.45. Went all the way down to 179.04. And looking at macroeconomics, in my opinion, I think that denotes that the economy is coming back, and the market is coming back. I think possibly it's coming back to new levels, but companies are doing a lot of different moves out there to secure themselves, which I don't know if it's panic moves or if it's moves that they know what's coming ahead. Because with the whole 5-to-1 split and 4-to-1 split with Apple and Tesla, basically securing more profits to them. So I don't know if they're doing it from the standpoint of they need the capital, which we all know Tesla doesn't need the capital. Apple doesn't need the capital. So I feel like Tesla's doing it from the standpoint of to help the investors, knowing that Elon Musk himself has even said, oh, the stock price is too high. So I think he's doing it from an investor standpoint. But I think Apple's doing it from the standpoint of, get as much money as possible before a possible crash happens again. So anyway, a lot of interesting things going on. Make sure if you want to sign up for Webull and get 2 free shares, I have a link down below where you can sign up when you deposit $100 into your account. Also have a link down below if you want to sign up for Robinhood. Yes, I do still use Robinhood, but I use Webull because their charts are a lot better. Also, I got a merch thing down there. If you want to buy some merch, selling some face masks and a t-shirt. So, might add some more merch to that. But make sure you check those out in the description. I hope this video helped you out. Make sure to give it a thumbs up if it did. And I'll see you guys next time.